Okay, I think we're live. Hey guys, what's up? How's everyone doing today? We'll just wait for a few people to join in and then we'll begin, yeah? Hey guys, how's everyone doing? Hi Rashmin, good afternoon. Good afternoon, people. Hi Bhargav. Thank you, Rahul. We're just waiting for a few people to join and then we'll start the session, okay? Awesome. Today's video is going to be about fundamental analysis, how we're going to do fundamental analysis to find out how to analyze a stock, and we will be doing that through an annual report. So it's going to be fun because I'm going to go inside an actual annual report and show you guys how to read a particular annual report and how to actually understand and make sense of an annual report. So we're going to do all of that live today. Okay. Hi Ganesh. We're just waiting for a few people to join and then we'll begin in a bit. Yeah. How's everyone's Sunday going otherwise before we begin? Hi Shubham, how are you? How's everyone doing on a Sunday? How's everyone doing on Sunday? Hope you guys are excited for what we're going to learn today because we're going to learn a lot. Today, again, I'm going to repeat, we're going to learn fundamental analysis. That means we're going to understand how to read and understand a lot of elements of a particular stock. We're also going to go through an annual report. So I will be showing you live how to go inside an annual report and find useful information inside an annual report. So a lot of good learning today. So stay tuned. It's going to be fun. Good evening, guys. Good morning, guys. So impressed that so many of you all are coming on a Sunday afternoon and attending the session so that you can gain knowledge, which is awesome, which is really great. Thank you, Devesh. We're just waiting for a few people to join in and then we'll begin, yeah? If you guys want to take notes, please keep your pen, paper ready or start making notes because today we're going to go inside an annual report in this masterclass and understand how to read an annual report very easily, right? It's not very complicated. I know annual report has so many pages inside it, but we will simplify it today and go through an annual report and try to figure out the main things required to do fundamental analysis. So अगर notes बनाना है तो notes बना लो, keep it ready with your pen paper all on the side. We will start that soon as well. Yeah. Good afternoon, Krishna. And once we go through everything, what we will do is in the end, we will also take some questions, right? So any questions you guys have through the what do you call that? If you have any questions which we have done in the financial annual report, that also you can ask me. Okay. Awesome. We have around 200 people. I think we should begin. Make notes, guys. I would say that live in the moment and learn in the moment. Make notes. Awesome. Chalo, I think we can begin, yeah? Okay, great. So, guys, are you guys ready? Are you guys excited to start? Okay, so let me rephrase it to let me tell for all the people who have joined recently what we're going to do in today's session. So, today we're actually going to do fundamental analysis of a stock. We're going to look at how important it is to read different parameters of a stock. For example, profit and loss statement, how to read balance sheet, how to read, and what we're going to do in this, in today's masterclass is we're going to go inside an annual report of one of India's famous stocks in the top market cap stocks. We're going to go inside an annual report and I'm going to show you live how to read that annual report and how to do fundamental analysis inside the annual report. Okay, so we're going to do this together. Okay, so I hope you guys are happy. Hope you guys are excited. So we will begin now, right? Just give me one sec. Let me share my screen. Awesome. One second. Okay, so you guys can see my screen, right, guys? Now, today's masterclass is basically about how to do fundamental analysis of a stock. And what we're going to do in today's masterclass is we're going to do financial statement analysis. We're going to learn how to read an annual report of a company. And then we're going to find out what are the different types of financial ratios that are important when you analyze a particular stock, right? So all of this is important when you do fundamental analysis. Now, financial statement analysis, what we're going to talk about, we're going to do how to read a balance sheet, right? First of all, where to find the balance sheet and how to quickly read some important points in the balance sheet. Then we're going to do a quick read through of how to read a profit and loss account. And then finally, we will find where the cash flow statement is and quickly read what a cash flow statement is as well. And what we're going to cover in the annual report, we're going to cover these four things, right? Director's report, management analysis, and report, again financial statement standalone and consolidated, and shareholding pattern. But what I'm going to do is not like all, if there are a lot of other people who will just show you this and tell you, okay, go read this by yourself. But what we are going to do here at Groww is we're going to go inside an annual report and real life show you how it works. Okay, so I'm going to do this. One second. So we're going to go directly inside an annual report and I'm going to show you how this works. Okay, so now this is an annual report of a company that all of you might have heard quite recently, and it is called ITC, right? So I'm pretty sure everyone's heard about ITC. Let me make this full screen so it's easier for you to see as well. So everyone's heard about ITC, yes? Me make it little, so I hope you can see my screen. Yeah, so today we're going to go inside the annual report of ITC India Limited. Okay, now ITC is obviously one of the biggest stocks in India with respect to market cap. It is an FMCG product. A lot of charchas happening with this particular stock, saying stock price is not moving. You might have seen a lot of memes in the past, but that's not the point. Today we're going to read and try to understand how to go inside ITC and read the annual report of this particular stock. So we're going to do that today. Okay, so don't worry about the company. We're going to see how to do it from a operational perspective. Now, the first thing we need to learn, okay, or we need to look at when you look at an annual report is something called as director's report and management analysis and a report, right? What is this director management analysis report? This is basically, I'll tell you what, right? Every company's directors, every company's main promoters, right? The people who are running this company come out with a report which talks about their own company. So if you look at the table of contents of this annual report, you will see this, that we have to find what board of directors and management discussion analysis we have to find. It is clearly written here, report of the board of directors and management discussion and analysis, right? Page number 36. So it's very easy to find in an annual report. I'm just going to show you the important things to read. Okay, Now, the report of this is something that we need to read most definitely first itself. So let's go to that slide. Now, obviously here it says 36, but if you click on 36 here, because how PDF works, it doesn't work that way, right? Because we're still on page 4. So we need to go to the actual slide. Don't worry, I've already done that to save time. This is how it looks. So report of board of directors and management discussion and analysis. Now I'll tell you why this is so important, or why all of you and me and everyone should read how it works when it comes to the management discussion and analysis. Management discussion and analysis, basically they talk about the entire ecosystem of what is happening around ITC. First, they'll talk about macroeconomic factors which is affecting ITC, which is affecting the world. Then they talk about micro factors. Then they talk about the company related factors. So we will go through that, right? The first thing, see that they say socio-economic environment factors. So basically they're talking about how in 2020 the global economy got a big problem because of COVID-19, and because of that we saw a big shock and everything contracted by 3.3%. This was the sharpest drop since second world war, which is World War II. So here they tell you about what happened with the world, right? The macroeconomic elements of what happened in the world, and they also have some big taglines saying that the depressed economic conditions are, and because of the government, and India responded very swiftly, saved a lot of lives. But all of this affected several share prices when COVID pandemic happened in March 2020. So in this, it talks about the macroeconomic, right? It spoke about policy announcements and union budget. Basically, it's telling exactly whatever happened in the last 1 year, right? How did it affect them indirectly or directly, right? So that is what they are saying. Now, if you go down slowly, you will see other stuff. Now, if you keep going down, right, you will see the management discussion analysis is massive. See how much discussion analysis that they've done. So apart from doing the major factors of socioeconomic policies, they also talk about some smaller things, right? So for example, the company, what is happening to the company. So for example, during the year, the company focused on maximizing livelihood generation for farmers and daily wage earners, because they deal with a lot of farmers directly under the Mahatma Gandhi National Rural Employment Scheme. So they talk about what ITC as a company is also doing. They talk about what is ITC's belief. They basically have a triple bottom line approach, creating larger stakeholder value. Stakeholder value means our value. Okay, we are shareholder, so that we get more benefit from this. So they're talking about what the company is focusing on, triple bottom line performance. So for all the people who are investing in ITC, should read the annual report, should read this part of annual report to understand what is the how is ITC thinking, right? How are they thinking? Basically, this is how they're thinking. Now, if you look here, they're also talking about how the company has sustained a good credit rating, double A rating, right? And it is also one of the highest among the global tobacco companies in the world. They're doing really well. Apart from that, apart from talking about what their company is doing, they also talk about the financial performance. They give you an explanation, proper explanation of what has happened in the financial performance. Now, why is this important, guys? Because profit and loss statement, if you watch, it is not easy to understand what is happening inside the profit and loss statement. You'll see revenue, you'll see expenses, you'll see profit, but how is that revenue coming? What is giving more revenue? All that is not written in the profit and loss, that you have to read in this analysis, right? So for example, if you look at the financial performance segment, you'll see this, right? See, the FMCG cigarette segment was severely impacted in the first half of the year due to COVID induced restrictions. So for all the people who had witnessed the COVID-19 last year, because half the places were shut and there was curfew, people couldn't go out, the cigarette sales became very less for this company, right? And then after that, slowly the COVID-19 rules got lifted, and then business slowly went on to becoming normal, and that is what they're saying. So the first half of the year they suffered due to no less cigarette sales. Then they're also talking about how they want to expand their EBITDA margin, right? So they're focusing on other segments, not only the cigarette segment, but they're focusing on other segments as well. And this gives you a basic understanding of what happens in ITC. This talks about the agricultural business segment that they have, what is happening there. The paper making segment that they have, it talks about that. And it gives you an overall scenario of what is happening in their stock price as well. So they tell you what is happening with the revenue, total, one full summary they'll give you, and they talk about everything else. So this is why management discussion and analysis, or the report of board of directors, is the most important thing to read in a annual report. Why? Because whatever is there in the profit and loss statement, you will not understand much from that, right? You will understand more from reading the annual report, and it talks about each segment. It talks about everything in detail, right? So this is also very important for a lot of people who want to do fundamental analysis of any other stock. You can find the best stock, go to their annual report, they will actually do the entire thing for you like this, right? Understood? You guys are understanding why this is so important. Basically, this is where everything, all the information is basically given for everyone. Then the next thing that we will look at is financial statements, standalone and consolidated. Now, where do we find financial statements in an annual report? Again, do we have to go find it? It's very difficult to find. It's not actually very difficult to find. Again, you come here and you will see the difference, right? There is something called standalone financial statements, and there is something known as consolidated financial statements. Consolidated financial statement basically means all the subsidiaries that they have, everything involved into ITC. If you merge everything, the total revenue that the whole group makes. Ideally, it's good to see consolidated financial statements. So if you want to go, let's go and check how consolidated financial statement also works, right? So the financial statement, it says 237, but it's actually at 269. Let me show you how this works. See this, consolidated financial statements. Now, this is where consolidated financial statement is there. Now, what I'm also going to show you something is that in the next one, we're going to do how to read a balance sheet. Right now, I'm going to talk about this and then I'll come back to shareholding pattern. So we'll do how to read a balance sheet because I'm already at, I'm already at the balance sheet part here with the consolidated financial statements. So the balance sheet is the first thing that you will see. Now, I'm sure all of you know what are the three things that are there when it comes to accounting, right? When it comes to accounting of a particular company, there are three basic reporting standards. One is profit and loss account statement, one is balance sheet statement, and one is cash flow statement. So there are three things, okay, when it comes to understanding and reading a company's financials. Now, the first thing that we are looking at is the balance sheet right now, and I'll tell you what to look at in the balance sheet as well. So firstly, assets. Balance sheet is divided into assets, equity, and liability. Three things. Now, assets are something that is good for the company, right? For example, an asset is something that I own, which has a value and it is very good for me. Liability is something that is not mine, but it is a liability to the business. That means I have to give it to someone or something, right? Assets are mine, liabilities are not mine. Liabilities are something that I might have to give it to someone. Correct? Very simple. And equity is basically the total amount of shareholding in the company. And equity also comprises of equity and reserves and surplus. Reserves and surplus means last year I made 100 crores, wo thoda bach gaya, whatever 100 crores mein se 80 crores was pending. So 80 crores goes here into the account statement, right? Into the other equity as well. So this is what we'll read. Now, three things to look at, right? Assets, liabilities, which are assets are good, liabilities not so good, and equity, which is ours, like basically the equity shareholding of the company. Now, assets, when you look at this, right, we will look at three things. There's assets, liability, and shareholder funds. Shareholder funds is also known as equity, okay, other equity or equity. Now, assets, if you look at first, assets are basically things like property, plant, and equipment. Property, plant, equipment is mine, right? So look at the number of crores of property, plant, and equipment that currently they have, ITC has. Then goodwill of the company, right? An intangible asset. Intangible means you can't touch goodwill, you can't feel goodwill, but goodwill is also an asset of the company, which is around 779 crores. Then you have other investment assets, financial assets, like the investments that they do. So they have actually invested in a lot of other things, and everything is there here as well under assets, right? Because why? It is mine, it is my asset. And if you want to go check, guys, this is another very important thing, please make a note of this. If you want to go deep dive and say, Shashank, you're saying financial asset investment is 9,700 crores. I want to know more breakup of this. How do I do that? For that, you go to note 4. Note 4 will be down below. Go to note 4 and figure out what is the breakup of this. Okay, so these are notes which you can go down and check it for yourself. Then we come to liabilities and other share equity, shareholder funds. Shareholder funds are basically equity share capital of the company, which is the total number of shares that the company has issued. Okay, either it is common shares or preference shares. Then it has reserves and surplus, which is other equity. So this makes up the equity. Now, liabilities are something that are very important. Liabilities are something that I have to give to people. Okay, give out to people. Now, liability basically has your loan. Your biggest thing in liabilities we need to look at is loan and trade payables. Two things, right? Loan is basically borrowings, amount of money I've borrowed from someone else or something that I have to give back tomorrow. So a lot of companies have a lot of loan, which is not good for the company. Then you have something called as trade payables. Trade payable basically means I have to give money to someone else, right? The amount of money that I'm still yet to give someone else is coming under trade payable. So this is how you analyze and read a balance sheet. Okay, these are the simple quick tips and tricks on how to read a balance sheet. Awesome. I hope you guys are understanding. Okay, awesome. Next. Now, if you want to go back, let's look at shareholding pattern. Right now, where do I find the shareholding pattern of a company, you would ask? Now, shareholding pattern, if you again come here, it says this, right? Report on corporate governance, including shareholder information. Very clearly given. ITC is very sweet. It's telling you exactly where to go and find whatever is required to find, right? So if you go through the report, you can find it, or you can do a quick search on the report. But I found it here and it's on page number 58, which says shareholder information. Okay, so it's over here, shareholder information, where it talks about everything, right? So let me go down a little bit. So it talks about the categories of shareholders as of 31st March 2021. Now, categories of, look at this, very clearly look at this, right? Institutional shareholding. Institutional shareholding, who comes under institutional shareholding? Insurance companies, mutual fund companies, banks who want to invest in the stock market, other big financial institutions, they all invest in ITC and they hold approximately 42% as of 31st March 2021. Very simple, right? Now, other people, so for example, apart from these people, 12% are by foreign portfolio investors, not Indians. Okay, foreign portfolio investors and foreign institutional investors. So big foreign investors are investing in ITC. That comes to around 12%. So 55% is basically institutionalized shareholding. Then we have non-institutional shareholding, not big people. Not majority of them are big people, but these are not big people. So if you look at this, foreign companies hold approximately 29%. Then there are NRIs who hold around 0.82%, very less. Then public and others, which public may we come under the picture. So public and others around 13.25%, and body corporate, which is 1.17%, totally comes up to 44. So if you add both public shareholding and institutional shareholding together, it comes to 99.88%, right? Which gives, which, and then shares underlying global deposit GDRs, which is slightly complicated, which is for the US. Total is around 100% here. So this is how you find out who are the shareholding people in the company. So this is in the annual report. This is how you find out. Understood? I hope you guys are following me. Yeah. I hope you guys are also making notes. So please make notes. These are all very important things to find. Next, we will look at how to read a profit and loss statement. Okay, profit and loss statement. Again, we'll have to go to that same consolidated profit and loss thing, which was on page number 269, right? 269. Right. So see this balance sheet we finished. Great stuff, guys. Now we'll look at profit and loss statement, which is 239. Okay. So we'll keep going down. Directly we'll come to profit and loss statement. This is the profit and loss statement. I hope you guys can see this. So this is the consolidated profit and loss statement. One second. Can you guys see it now? Let me make it full screen for you guys. Abhi to dikhega full screen. Right, if you guys can't see it, check your internet settings. It might have dropped to 144. Just make it in HD, right? It's very clear over here. So if you look at the revenue from operations, this is basically as of 31st March. Everything is in crores, so please read this because sometimes it's in lakhs, sometimes it's in INR million. So this is in crores. Okay, now if you look at revenue from operations, what does it mean? Basically means the money that they make from doing their main core business. Okay, so revenue from operations is 53,000 crores that they have, right? 53,155 crores. First thing you see is revenue from operations. Then we have something known as other income, which is not from the core business. So this is other income, right? And that becomes total income of 55,000 crores that they have as total income. Got it? This is simple. Now, next thing you need to look at is expenses. Okay, next thing you need to look at is expenses. Now, this is expenses, right? Now, in expenses, you have so many different types of expenses, but I'll show you some important things to look at. One is cost of raw materials consumed, which is basically required for anything that you're doing, right? Any business that you're running, you need raw materials. So this is something that you should look at, which is cost of raw materials consumed. Then we look at something known as employee benefit expense. Do you know what employee benefits expense is, guys? Employee benefit expense basically means the salary cost of all the employees that are working under you. They have salaries. This is the salary cost. So the salary cost for ITC is totally around 4,400 crores. Right? They make 55,000 crores, but their salary is only 4,400 crores. Finance cost is basically their interest cost. If I have a loan, right? If I've taken loan and I have to give EMI back, interest cost comes under this part. So finance cost is nothing but the loan cost, the cost of loan, right? That is what it is. Then we have depreciation, which is 1645 crores, and then other expenses. Now you'll be like, Shashank, what is other expenses? I don't know. They can't just put say other expenses and we don't know what comes under other expenses. So if you want to know what other expenses are, there is a note 26. Go to note 26 and it'll tell you exactly what are the different other expenses that are there. Okay, understood? Simple logic. Okay, now here comes your profit before. First you got your income, then you removed your total expense, right? First I got income, I removed total expense, then it comes basically profit before exceptional items and tax. Okay, so this is all profit before exceptional items and tax. Sometimes there are exceptional items. Exceptional item basically means something very different that only comes once in a blue moon, right? It is not something that is a recurring business. It's exceptional for one time. Maybe they've sold something, or maybe they sold one of their subsidiaries. That is one time expense or one time cost or whatever it is, one time profit or one time expense, that would come here. Then you have tax. Okay, so if you look at profit before tax, they have 17,000 crores, almost 18,000 crores is their profit before tax. Now look at the tax amount that they pay, guys. They currently pay 4,400 crores, almost 4,500 crores almost in tax only. So they pay 4,500 crores in tax every year to the government, right? So this is how you look at it. And then what happens is profit for the year finally comes up to 133 crores. Finally, the profit comes up to 133 crores. This is what we have to see. So this is exactly how to read a profit and loss statement from top to bottom. It's not very difficult. It's very easy. Basically, income you have to see, then remove the expenses. After you remove expenses, remove the tax also. Once you remove the tax, whatever is left is my final income, right? So also in the profit and loss statement, you will see something known as EPS, which is earnings per share. So this is also something that is important for everyone to look at. So the earnings per share is 10 rupees right now, right? Each share is what? 10 rupees. That is what it says. Earnings per share. And that is a different formula for that as well. We will come to all of that in the next half. Okay. Now, third thing, most important thing to read is a cash flow statement, right? Third most important thing to read is a cash flow statement. Now, a lot of people, I'll tell you, don't read the cash flow statement very clearly. Why they don't read the cash flow statement really? Because everyone looks at the profit and loss account, everyone looks at balance sheet, and they're like, okay, done. I have understood how to read the company, right? But no, very few people read the profit and loss cash flow account. So we'll look at how to read the cash flow account. So again, we'll go back up. We'll see where the cash flow account is. It's here, cash flow statement 242. So let's go down to 242, which is only 5 pages down. Yeah, this is 242. Look at this. Now, cash flow statement has three things under it. One is cash flow from operating activities. Okay. Cash flow from operating activities basically means my business that I'm doing, the amount of money that is coming in the company, the cash that is coming in the company from business activities is cash flow from operating activities. Then they have something known as cash flow from investing activities. Investing matlab kya? What is investing? Investing basically means I am taking my money, whatever extra money I have, I'm investing in different funds, and that funds say I get some return. So that is money got from investing activities. This is not from my core business. The third thing is cash flow from financing activities. Financing activities may include loan, right? So if I take a loan, that is money coming into my bank account from loan, but it's not from my main business. So this is what the cash flow statement talks about, and it has a 3-level bifurcation. So the first thing is cash flow from operating activities. Now, what is cash flow from operating activities, right? So look, the cash flow is slightly different to look at. So for all the people who are looking at cash flow for the first time, cash flow is basically the flow of cash in a bank account. Okay, very simple terms, it is the flow of cash of a company in their bank account, inside and outside. So every time you see any money that is going out of the bank account, it will be negative. Anything that is not in brackets is money coming into the account. So for example, if this is saying minus 1297, this means money from the bank account has gone out. So interest income worth 1297 crores has gone out to people, correct? Whereas all the other things are money coming in to the company. So that is how you look at it. So for example, depreciation is not exactly an expense because you don't give it to anyone else. So this is coming back in the company. It's a part of the company itself. So this basically talks about all the cash flow coming from operating activities. Okay, understood? Great. Then we have something next known as cash flow from investing activities. Now, investing activities is anything that I invest, whether I'm investing in a fund, whether I'm investing in different plant and property, whether I'm investing in land, whatever I'm investing in, I have to show where my money is going and show to the shareholders where I'm investing my money. Correct? Whether I'm putting in fixed deposit. Correct? So that is what it looks like. Now, here, if you look at this in this cash flow, purchase of property, plant, equipment is 1800 crores they have spent. And why is it in bracket? It's in bracket because the money is going out. Yeah, when you put it in brackets, this shows that the money is going out. That means they have gone and purchased something for 1800 crores, right? Same way, if you look at current investments, or if you look at, say, for example, investment in bank deposits, maturity not more than 3 months, so around 4600 crores they have put in bank deposits. Correct? This is how you look at that. Now, this is of purchasing some current investments. They would have invested somewhere. If you're investing somewhere, they've invested 55,000 crores somewhere, right? 55,000 crores has gone from their bank account for investment, and when they have done the sale of that investment, they have got the money back into their bank account, which shows positive, which is around 61,000 crores that has come back into their bank account. So this is how you do a cash flow from investing activities. Now, finally, we have third part, which is cash flow from financing activities. Financing activities basically talks about how do I get money inside the company. Either I can take a loan or I can sell my shares, right? I can sell some shares and take loan, or I can just directly go take a loan. So this is what cash flow from financing activities talks about. Now, see this: proceeds from issue of share capital means they're selling shares and getting money into the company, 280 crores worth of that. Now, have they taken have they paid any borrowings that they had taken? I mean, do they have they paid back some loan amount? Some 2 crores they paid back loan amount, right? Now, have they taken any more have they taken anything else inside? No, nothing great. Now, dividend paid. Now, you know that every company pays dividends. Now, dividend comes under cash flow from financing activities, right? Because they're paying this dividend back. Approximately 18,000 crores are given back to the shareholders. So that is how dividend paid comes under the cash flow. So guys, I hope you have understood these basic things about how to read a annual report, right? This is how we checked how to read cash flow from operating activities. We checked how to read cash flow from investing activities and financing activities all together. Guys, before I move to the next segments, did you guys understand? I want you guys to tell me if you guys understand. I'm looking at the comment section as well. So before I go to the next segment, I want you guys to tell me, did you guys understand? Right? I'm just going to take a 1 second break here. Right? Awesome. Okay. So now next, what we're going to do, that was basically on how to read an annual report. Now you know how to read an annual report. Yes. Now you're confident you know how to read an annual report. Basically, it was not very complicated, very simple. I'll summarize again, Kishore, for you. So basically, if you want to read an annual report, first thing you need to look at is management discussion and analysis, right? Which is again there in the table of contents. Very simple. Director's report and management discussion analysis. Second thing you need to read is the shareholding pattern or shareholding information. Third thing, you need to go directly to the financial statements and read three things under the financial statements. One, balance sheet, which comes first. Second, profit and loss statements, which is second. And third, which is cash flow, right? Three things. Now, if you want more information on these three things, there is something called notes, right? So you can go find the notes below and go more into it and understand it. So this is how you understand how to read a stock or how to analyze a stock from their annual report. Okay, itna understood? Awesome. Now, next we will look at, guys, how to read a stock or how to analyze the stock, because our work is not done now. We how to read it with profitability ratios. Now, profitability ratios, these are basically financial ratios, different financial ratios. Now, financial ratios are split into three categories. They are profitability ratio, means all the ratios that talk about the profitability of a company. Then we have liquidity and solvency ratio. These are ratios which talk about whether my company is going to become bankrupt or not, whether it is good or not. That is what liquidity and solvency ratio talks about. And third, we have valuation ratios. Valuation ratio talks about how to value a particular company. Okay, so we will look at each of them one by one so that we understand how to analyze a particular stock. Now, profitability ratio is very simple. We only have three things in profitability ratio. One is operating profit margin, one is net profit margin, and one is return on equity. Very simple, three things. Now I'll show you where to find these three things also. Okay, one second. See this. I'm going to the Groww website. Okay, I'm going to show you from starting how to read this. I'm going to the Groww website. This is how the Groww website looks. Right now, in the Groww website, I'm going to search ITC, ITC Limited. You can click on this. It opens the shareholder. It opens the entire page of ITC. Now, if you want to buy and sell, everything is here. I'm also logged in. Right. So if you have you put your balance and you can buy or sell everything over here. So this is how the entire industry looks. See, this is in the tobacco industry and this is the stock pattern. So you can look at 5 years, 3 years, 1 year, according to how you want. If you want a candlestick pattern, you can look at this also. But let's look at where the profitability ratios are there. Okay, let's go down. I want to look at the profitability ratios. Now you come to the financials. Okay, and when you come to financials, you click on yearly, right, and you click on see details. When you click on see details, look at how the yearly looks like, revenue, expenses. Now we saw all this revenue and expenses, we saw directly in the annual report itself. All this is good. We came to know how much is the operating profit margin. We know how much is the net profit also. 2021 net profit was 13,000 crores. This much we understood, right? Now look at this. This is what is more important. Financial ratios very clearly given here. The first thing that is there is operating profit margin. Operating profit margin is nothing but the operating profit, how much is the margin that they're making from their sales, right? So it's basically operating margin to their total sales. And why is this important? Because any company who is operating a business has to operate with efficiency, right? So they should get more margin, more better the margin. That means lesser the expense. If the expense is lesser, then the money becomes more, and if the money becomes more, you as a shareholder only will benefit from that. So what we should look at is it growing? So see how it is growing. In 2017, it was 24%. Then it became 32, 34, 34. That means they're operating at 34 profit margin. And 2021, because of COVID pandemic, it fell down. And how did we come to know how it fell down? Because we read the annual report under management and directors report. Next thing you look at is net profit margin. Net profit is this amount, which I've highlighted here, right? If you see this net profit in the end. So net profit margin is nothing but this amount divided by the total revenue. So if you look at the net profit margin, it says, is it growing? We have to only see if the net profit margin is growing. That means, are they making more money with the same amount of revenue, right? Are they making more money or not? So net profit margin should be an increasing trend. So see this, it is increasing 17%, 23, 25, 29% last year. But this year again, it fell down. Why? Because of the COVID-19 pandemic. Now, the third thing that was there in the presentation that we will look at was something known as return on equity. Right, return on equity is also known as ROE. Right, I don't know whether you guys have heard of this, but ROE is also very important when it comes to understanding the profitability ratios for any stock. Right, now if you look at ROE, let me go back to ITC over here. Now come down, you will look at this. See this, ROE is here, return on equity. ROE ka full form is return on equity. Return on equity is currently 20.95%. Now what is return on equity? Basically, return on equity basically says that how much return am I getting for the number of shares that are there in the market. So as a shareholder, what is the return I get, right? So basically, return on equity's formula is also very simple. It is basically the total net income, okay, net income that I have, and it divides it by the equity of the shareholders, or shareholder equity. Now do you know where we saw shareholder equity? Right, do you remember where we saw shareholder equity? Shareholder equity was found in the balance sheet under that liabilities and equity part. So it's basically net income divided by that shareholders equity gives you the return on equity. What does this formula basically suggest? This formula basically says that if I am investing in a company, if I am a shareholder of this company, what is the return I can expect from this company? That is what it basically says. Got it? Awesome. So this was profitability ratios. Okay, simple shit. This was profitability ratios. Next, we will look at liquidity and solvency ratios. Now, why I'm saying liquidity and solvency ratios? Because liquidity and solvency ratios basically tells the company's ability to pay off its loan, pay off its debt. Now, why is that important? Because if a company has too much loan and very less income, then how will it pay? It'll become bankrupt, right? It won't have money to pay the loan. And then you, if you have invested in that company, the company will go down, down, down. Your share price will go down. Your money will also go down. So these are some important ratios to figure out how to look at when it comes to understanding solvency ratio. Now, the first thing that is there that you can see is called current ratio. Now, current ratio is basically a financial metric that basically makes us understand whether the company can pay off its loan immediately, right? So it basically, the immediate liabilities are there. Immediate liability means if I have to pay off 100 crores worth of loan immediately, right, can I immediately liquidate everything and sell it off fast? Now what does current assets mean? Current assets means assets that are liquid in nature, means I can withdraw it tomorrow and it'll come back into my bank account. There are some assets that are not liquid in nature, right? Do you know which assets are not liquid in nature? So for example, if I go invest in a plant or machinery or land, if I have to go sell that land tomorrow, it will take me time to sell that land. So the current ratio talks about basically if I sell all my current assets quickly, and current assets are basically cash in bank, cash and cash equivalents that are there also in bank, maybe amount of money that I have to receive from from guy, have to vendor, have to receive money. So that is also comes under current ratio. So that is what it is. Immediately if I have to pay off, do I have that ability or not? If I don't have that ability, you have to be careful, because even after liquidating everything, if I can't pay back my loan amount, that means this company may problem hai, right? This next thing we will look at, I will do third first, which is interest coverage ratio. Now interest coverage ratio concept you need to understand. Okay, it's very simple. If my interest amount is 100 rupees, correct, interest amount is 100 rupees, right? Now interest coverage ratio basically says how much money do I have right now, how much money am I making right now to pay my interest off. So if I make 500 rupees, my interest coverage ratio is 5 times, right? So 5 times I can pay my interest, so I'm a safe company, right? So interest coverage ratio is nothing but earnings before interest and tax, basically all your expenses you remove, earnings before interest and tax, and divided by the interest, whatever your interest is. So it basically says if I have 100 rupees worth of interest that I have to pay, and I'm making 500 rupees after removing all my other expenses, means don't worry boss, I have 5 times more coverage on my interest. So 5 times I can pay my interest again and again if it's required, which is good. But what if I have 100 crores worth of loan, but I only, after removing all my expense, I only make 50 crores in revenue, right? Finally 50 crores is left. So I don't even have 1:1 interest coverage ratio. I can't even pay back my interest, leave my main loan amount. So that is what it talks about. Now the third thing that we will look at is known as debt to equity ratio. Now debt to equity ratio, I will show you where it is on the Groww website as well. So I go to see details again. It is under the balance sheet, and if you go under the balance sheet, you will see it here, right? This one, debt to equity ratio. Now debt to equity ratio has to be low as possible. Why does it have to be as low as possible? Debt to equity ratio basically talks about the total amount of loan that a company has with respect to its equity, and equity also includes the shareholding funds, also includes your reserves and surplus. So if I have a company where I have 100 crores of loan, okay, but my equity is only 50 crores, then I'm in big trouble because I don't have money to even pay off my debt amount or my loan amount. So that is something how you will have to figure that out, right? So this is basically solvency ratios. Now the third thing that we will look at is valuation ratios. Now valuation ratios may also, there are three ratios. One is price to earnings ratio and price to book ratio. I'll show you where this is in the Groww website again. Now if you go to ITC, on the main website of ITC, if you come down here, you will see market cap, and below market cap you will see price to earning and price to book. Now I'll tell you the simple understanding of price to earnings. Price to earnings is a ratio, which is a valuation ratio, which basically talks about the current price of the market, current price of the share, which is now currently 204. So it's basically the current price of the share divided by EPS, which is earnings per share. Now where did we find EPS? We found EPS in the profit and loss statement. Remember I showed you that 10 number. So that is EPS. So that is basically what price to earnings ratio looks like. Then we have something known as price to book ratio, which is currently at 4.2. Now price to book ratio is the relationship between the market capitalization of a company, right, which is basically the market capitalization of the company, and also it talks about the total number of assets that a company has. So it takes this market capitalization, the 2,53,000 crores, and it also takes the total number of assets that are there in the balance sheet, and then it figures out whether it is good or bad. So basically what price to book ratio is talks about is market capitalization divided by the total book value of assets, which shows you whether it is good or bad and how many times it's trading more than its assets. So currently ITC is trading 4 times more than its assets. The price is trading 4 times more than its assets. So that is what it talks about. The third valuation ratio that is there is price to sales ratio. Now, price to sales ratio basically talks about the price and the comparison to the net income of the particular stock. So, for example, ITC's income or sales is something, it compares it to the price. So, this is how you analyze a stock. So, analyze a stock, first thing you have to do, guys, is to first understand the industry, right? The company operates in, which industry it operates in. Look at the company's history. You have to also check its future potential of growth. Then we have to go through the financial statement of the company, and at least 5 years financial statements you have to go through. Then you understand different financial ratios of the company and understand how it is compared to the industry as well. And then we find out some good pros and cons of investing in the company as well. So these are some parameters for you to analyze a particular stock. Now, if you want to understand the industry, it is very important to understand whether it's a normal industry or it's a commodity stock type cyclical industry. Cyclical industry means only some quarters will do well, some quarters will do bad, so your share price also will move according to the same time. Then you also have to see whether the potential of the industry is good or bad, whether it has growth or not, whether some new thing is entering the industry that can destroy your entire company. Like, for example, now you see Netflix, Hotstar, a lot of OTT platform coming in, cable TV industry is getting affected. So all these things you need to understand when you analyze a stock. So it's not only simple things. Then you also look at some qualitative behavioral stuff of a company. Qualitative aspects means you need to look at whether my company right now, is it the market leader or is it not? Is it like a new person who's entered, right? So ITC is like a market leader, or is it some new person who's entered? What strategies are they using to become the best or stay the best, right? And do they have some USP with their competition? Are they something they're doing really well that their competition can't do? And all these things are super important when you analyze a particular stock, right? And also it is very important to figure out who is running the company. So management track record is also one of the biggest and most important things, because who's running the company is also very important. So look at the shareholding pattern of the company, because if the promoter or the owner of the company is selling his stake constantly, it is considered bad for you, right? You want him to have more stake as possible. And if you look at from a quantitative perspective, like what we did, we saw the last 5 years for profit and loss. We have to look at balance sheet last 5 years, cash flow in the last 5 years, to realize how this company is doing over a long period of time. So these are some important things to look at. After that, you can also look at some ratios which we spoke about: valuation ratio, profitability ratio, liquidity and solvency ratio. And understand this, right? Ratio will not determine everything. It is just to help you understand whether the stock is good or bad. You have to do all this research to basically figure out whether this stock is a good stock or a bad stock. So every decision that you make when you're investing, you have to look both sides without being emotional. Logically, you have to look at both sides. What are the good things? What are the bad things, right? And you need to analyze further. If one thing is bad, you can analyze a little bit more, right? But you can't just look at one ratio and be like, this is a good stock, and start investing in that. So write down all the pros and cons and then take your decision whether it is good or bad. So basically, guys, this was the entire presentation on how to analyze a particular stock. Got it? Hope you guys understood. I'm going to take again a water break, but again, please let me know if you guys understood or not. Now I'm going to take some questions from everyone. So please shoot me your questions also. I'll put it on the screen and we will take it forward. Yeah, awesome. Again, did you guys gain knowledge today? Did you guys understand how to read a balance sheet, how to read an annual report? And now you understand how so many things you need to look at when you're investing in a stock. Yeah. So these are all very important things, guys. Very, very, very important for you. I've been talking constantly. I need a water break. Awesome. So any questions you guys have, you can put it up. I will take it up on screen and answer your questions. Okay. Okay. So we have a question from Krish. I'm assuming it's Krish08. Krish basically saying, what is PE ratio? So PE ratio is nothing but price to earnings ratio, right? Price to earnings ratio. Price to earnings ratio basically talks about the price of a particular share it's trading right now divided by the earnings per share. Now, if you want to know how to read this, or you want more information, Krish, I will show you something. Give me 1 second. Look at this, right? You can see my screen. So on the Groww website itself, there is something known as P ratio where you can go read everything about it. So P ratio, it talks about what it is. It talks about the formula of P ratio, which is current market price of the share divided by earnings for the share. Earnings per share, we saw how it works in the profit and loss statement. And there's also examples. So there's massive amount of information that is there available for free for everyone to read on the Groww website. There's forward P, there's trailing P, relationship between this, and how to do value investing. When you have the free time, definitely go start reading all of this. It is all there on the Groww website, so don't worry about that. Okay. Hope that answered your question, Krish. Good. Thank you, Barka. Okay. So I'll just take some question. Okay, so this one good question by King's Crown. So ROE is good between what? So King's Crown, basically ROE is return on equity for a lot of people. Higher the return on equity, it is better for me. Because why? That means this company or this stock is giving good return to the shareholders. So higher the return on equity is good. Now that also depends on what is good for you. So for a lot of people, 15% return on equity might be great. But I'll be like, no, I'm Shashank. I want maybe 20%. Some people might say I want 25%. So it all depends on what you feel is good, but higher the better, King. That's what I would say. Yeah. Okay. Thank you, Monica. Okay. So this is also one something very. So what are these names, guys? Okay, so Zeus Almighty is asking a question saying, what about ROCE? So ROCE is nothing but return on capital employed. That is very complicated when I say it in the long form, but let me understand. Let me teach you in a very simple format. Return on capital employed basically says, if I am a company, say making this water bottle, right? What I'm doing is I need a new manufacturing plant. I need to build one manufacturing plant. So I'll put 10 crores on this manufacturing plant so that I can build more water bottles to sell for everyone. Now, what is the return? Now, this is the capital that I have put to make a manufacturing plant. So that is my capital employed, right? I have put this 10 crores into making a manufacturing plant. Now, the return that that plant gives talks about return of capital employed. So I hope Zeus Almighty, I hope that answered your question. That's nice. Um, Okay, Ullas is asking a nice question. What are pledge shares? So pledge shares is basically, okay, how to explain this simple terms, right? I'm only see, it might seem complicated with the terminologies, but I'm here to explain in very simple, crisp format. Okay. Now, when you have a house, right? You have a house and you want loan, but the bank is not giving you loan, then you'll be like, acha, house girvi rakhna padega. I have to give my house for mortgage, right? So you'll give your house for mortgage and you'll get money from the bank. So tomorrow, worst case, if you can't pay back that loan, the house will go to your bank. The bank will take your house and go. Similarly, in a company, sometimes what happens is that the banks are not ready to give loan because maybe the business is not good. So the bank will be like, listen, I can't take your house obviously, but what I can do, I can take something valuable from you, which are shares. So please give me your shares. So the shares are now mortgaged with the bank, and these guys the shareholders mortgage the shares, right, with the bank, and take loan from the bank to operate business. And then tomorrow when they make money from that loan, they will go release the shares back from the bank and take it back into their pocket. So that is what pledge shares means. Yeah. Hope that answered, Ulas, your question. Guys, there's a lot of information on the Groww website. When you're free, definitely go, just start reading it. So much information, P ratio, whatever, every ratio, everything is there over there, right? So please go read everything that is there. Hmm. I'm just checking the questions so that I can take some on the screen and teach everyone. Hmm. So, phase toolkit, how to determine an entry point into a stock? You can't actually determine because if I'm looking from a long term perspective, if I'm looking at 3-year perspective or 5-year perspective, then if I analyze a particular stock, then anything from that 5 year perspective, if I look at from that timeline, then any time is a good entry point, right? The A lot of people try to find the best time to enter the stock, but I always say, if it's 5 years, what do you think the price will be? So isn't it not okay to invest right now? So it all depends on you, man. There's no fixed answer to when to invest or when to enter into a stock. Yeah. Hmm. So again, Divya Bay Money is asking, is price to book under one good? So again, price to book is just a ratio that helps you to understand particular stock and try to benchmark it against different stocks. Now, price to book is again subjective. It is different for different industries. All these ratios are different for different industries, right? So for example, banking industry price to book is very different from when you look at a FMCG company. So in FMCG company, people usually look at price to earnings ratio, whereas in the banking industry, people look at price to book ratio. So again, there is no good or bad. I would say look at the industry and see how the industry is. If everyone in the industry is trading at 3 or 4, then how can one be good, right? Or less than one be good? Hope that answered your question. Yeah. Hmm. Second. So, very good question. Bhargav is asking, where can I find those explanations on the Groww website? So, Bhargav, it's very simple, right? If you go to the Groww website, there is something known as resources, right? So, you go to the resources tab, and under resources tab, you'll see investment basics. And under investment basics, there's full introduction to everything about stocks. Or you can just Google it saying price to earnings ratio on Groww, and that will lead you to a nice page which talks about every ratio that is there on the Groww website. So everything's available for free. It's up to you to go read and learn. Yeah. Awesome. Hope that answered your question, Bhargav. Hmm. Okay. Guys, I can't do stock recommendation. What I'll do is I'll take one or two more questions and then we'll stop. Yeah. Awesome. Any question that you guys have, some good questions that you guys have regarding what we have discussed today? We went through an entire annual report. So, any questions you guys have with respect to anything on the annual report, let us know. We will answer those questions, right? We'll take one or two questions and we will stop if there are some good questions. Yeah. Uh, okay, so Ninad is talking about IPO analysis. So basically, just like how we went through an annual report of a company, so IPO also, when an IPO company comes, they release something called as a DRHP or a RHP, right? Which is draft red herring prospectus or red herring prospectus. Now, if you go inside that, again, there's a table of contents and there is a lot of information inside, which talks about the current IPO and what its business is, right? So that is also a document you should definitely go through as well. Hmm. So Manoj Prabhu, this is what I'm saying, right? Price to book or price to earning ratio, high or low, doesn't matter. It is a ratio that is used to compare across different companies in the same industry. So if you're talking about sugar industry, look at what is the price to earning ratio of all the stocks in the sugar industry and see where your company lies, right? Whether it's under the industry average or over the industry average. Now, if it is under the industry average, then maybe there's something wrong with your stock, or maybe everything is right but it's not gone up, so it still needs to go up, right? So this is something that you need to look at. So there is no good answer to whether it is high or low. You should just look at the industry and figure out, because some industries are low, some industries are high. Yeah. Chalo, we'll take one more question and then we'll call it. Yeah. Ah. Some good fundamental question, guys. Thank you, Manoj. You will take one last question and we'll stop, yeah? But I hope you guys have learned today. I hope you guys have understood a lot today. Uh, I hope you have realized how it works when you have to analyze a stock, because it's not very simple to analyze a stock. There's so many parameters for you to learn, and basically what we like to do is we like to come and teach so that you learn at least 1% or 2% more than something that you would have not learned in a day, which makes you an educated investor, which makes you a smart investor. And if you become a smart investor, you'll eventually know how to analyze the market and move it for your benefit. Yeah. Awesome. Okay, so this is a good question, little off topic, but we can do that. Oh, actually, this is a good one. Tushar is saying how to evaluate management quality. A good question, Tushar. So basically, when you look at the management people who are managing the company, you'll see the board of directors, you'll see the CEO. You have to do some research about them. So basically, check what they've done in the past, read some articles about how they're thinking. Then if you go to the director's report, which talks about the report that he's talking about, so you'll see how he's thinking. So management quality, you have to definitely do a background check of the people who are running your company, because in the end, the people who are running your company will ensure that you make more money. Yes. So you have to go do your own research on who the management is. First, find them out, who's the CEO, who's the director, who's running the company, who's running each department, and then go see what they've done in the past. Are they previously have a lot of experience? Are they good to run something like this? So all these helps, Tushar. So hope that helped. Yeah. Awesome. So guys, this was the entire session today about how to analyze the stock. We did a lot of deep diving into how to understand an annual report. We went inside an annual report. We understood profit and loss, balance sheet, lot of different parameters. And finally, now I feel you guys are educated investors. And also, I love the fact that you guys on a Sunday evening have come, spent 1 hour and learned a lot. So I think salute to you guys for doing this on a Sunday evening, because you're here educating yourself, and that gives me motivation to come every Sunday and teach you guys also, right? So I'm really glad, I'm really happy. Again, big shout out to the Groww team for putting all of this together. Hope you guys learned something today, and this is me, Shashank Uduppa, signing off. See you soon, guys. Bye.